My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to my trading game plan. Of course, I'm Gareth Soloway here, Chief Market Strategist at verifiedinvesting.com. Big things going on in the markets. A lot of people already panicking out there, whether it's in crypto or in stocks. If you followed right here with me at Verified Investing, you knew this was the likely outcome. The high probability outcome was this right off of this levels. I've been pounding the table for literally the last week about what's going on with the data centers and how a lot of them are being halted. We've talked about the shuffling of money back and forth, which is very shady, and even the accounting practices of these hyperscalers that have basically been using depreciation over 7 years versus the reality is a depreciation that's pretty much 2 to 3 years long. All in all, the charts were really the answer, though. All right, what are we looking at here? So, folks, one of the things we have to go over, we have to just take a look at the predictors here. This was the biggest predictor that the market would top, even more than the S&P 500, which I'll show you next, because this one was the market. The AI trade, the semiconductor trade, we're looking at the SMH here. The SMH is the semi-ETF. And as I've shown you every day, we in 2021, 102% away, 45% correction. In 2024, 102% above the 200 moving average right here. Same thing over here, and a 40% correction. Therefore, when we hit 102% right up here, what was likely to happen? Some sort of retrace and pullback. Now, throw in this chart. This is your weekly S&P 500 chart, which again, look at what we just tagged in the upper range right here. A few weeks ago when we made our all-time high, we pierced the high of the parallel, game on. And again, this is why technical analysis, to me, I don't even know how anyone invests and trades without it. And it's not to say that it's the end-all, be-all. I want to be clear on that. All it does is give me a high probability of what's going to happen. There's no certainty. There's no 100% in trading or investing. But I would literally, you might as well just put a blindfold on me if I'm going to not look at charts to give me guidance on should I be a buyer, a net buyer in cash, or a net seller in the markets. And that's what the charts are giving me the inclination or the insights to do. Okay, back to the charts we go here. The S&P futures are down again today. Can we recover? Will the buy the dippers come to the rescue on a Friday? We will watch, but one of the things we can see is that this is where the markets closed yesterday, right here. And we are now down, folks, basically 70 points, 1% on the S&P. That's a big move. To start the day down 1% on the S&P, that's a hefty one. Now, yesterday we dropped 1.66% on the S&P. The NASDAQ was down over 2%. Now, if we talk about where our targets, right? So again, it's great to know that a correction is coming. But the question I have is, okay, well, how low are we going to go before we get a significant bounce, right? And there'll be bounces right? You have a few down days, you get a bounce day. You get a few down days, you get a bounce day. But where is the bigger near-term first target of a correction in the S&P? And to do that, folks, we're going to flip back to our S&P chart. It's very easy for me. I look at the past level, the past major high, which was the first point before we pulled back with the liberation sell-off on tariffs. That now becomes our major technical point, right? So we can put a trend line right in there. It's around 6,100. All right, 6,200, 6,100, right in that vicinity. So what we're looking at here is from an all-time high on the S&P, we're looking at as much as 11% drop. Now, we're already down about 3% off of our all-time highs, maybe even a little bit more based on where we're going to open today. But if we look at that, it basically means another 8 to 9% downside, which would be 7 to 8% based on where we are right now. Now, remember, folks, as I said, it doesn't mean we're going to go like this. Okay, that's not generally how markets work, especially a market that has been kind of programming or brainwashing investors to buy the dip. Investors will still buy dips, and we might even see that today intraday. I can see the markets bouncing significantly intraday today. In fact, I'm going to be day trading it. We had an amazing day trading day yesterday and the day before. This volatility is like cream of the crop type trading atmospheres. But in reality, we'll go like this, then you'll have a big bounce, then you come down like this, and then eventually we flush And then we get a more like a multi-week, maybe even a month or two bounce into maybe even into year end. Who knows? Maybe that's the Santa Claus rally there. We'll have to watch and see. Now on the NASDAQ 100, look, we closed below this major level. The big question I have today is, do we confirm a breakdown on the NASDAQ 100? If we close below yesterday's low on the QQQ, it is confirmed. And that would mean, it doesn't mean we're going to crash. It means that in general, now the bias is strongly to the downside. Same sort of thought process. We could come down a little, then get a bounce, maybe even a retrace to the scene of the crime, then come down, then like that, right? So markets, again, I always like to impress upon, that to people, because what'll happen is you get a bounce and then everyone's like, oh, it's going to all-time highs. And I'm like, calm yourselves. Calm down a little bit. Good example of this, by the way, is silver and gold. So yesterday, you wouldn't believe, right? So I said yesterday in the game plan, I shorted silver at the double top area. People were like, oh, he's crazy, da-da-da-da-da. Same thing with gold. Like, oh, gold is going back to, look at what's happening to gold and silver today. They're getting rocked today. All right, so we'll look at those charts in just a minute. But the point is, I follow the charts. I want you to follow the charts. It's so liberating, because all of a sudden, all I know is that I'm basing all my decisions on probability, not on emotion. And sure, I'll be wrong sometimes, but as long as I'm right 75% of the time, no problem. I can deal with that. To go into trading and know that every 10 or 20 or 100 trades I take, 100 trades, 75 will be right. Okay, game on. Let's do that a million times. Okay, 10-year yields today are falling. We know that one of the recent culprits of basically the market angst is not only the AI trade and valuations, but also the Fed being very hawkish. The odds of a rate cut in December coming up is only 50-50. Now, what could make the Fed cut rates? Ironically, if the stock market sells off 5 to 10%. Right? All of a sudden, right? And you have to understand, the Fed understands this. What is one of the biggest drivers of inflation? Well, maybe tariffs to some extent, but also the stock market, because the high end, the high net worth people are just buying and spending like drunken sailors, even when the lower income players can't even buy food. But that's keeping inflation up. The fact that the markets have been going up. And so the Fed knows this. The Fed knows if they can cause a correction in the market, it will bring inflation back towards their target. Then they can actually cut rates. It's kind of weird. Right? So wait, if the markets fall, then the Fed can give us what we want, the rate cut, right? But that's the way it works here. Okay, so let's continue on, guys. We've looked at the SMH. NVIDIA has not broken down yet. So while the SMH and NVIDIA are still holding strong, Broadcom has broken down. We've seen Robinhood break down. We've seen the QQQ break down, but not confirm. But this is the trend line today. Now, look, NVIDIA is trading at 181. We are below. Do we close below today, finally, on this major trend line? Or do we hold? Do they rally us back above? NVIDIA is the biggest company in the world by market cap. That's one we have to be watching. All right, couple other charts out there. AMAT reported earnings. That stock, again, even though it was down sharply yesterday because of the market, it's selling even more, trading at 208. If we look at this on the daily chart, look at this. So again, it had kind of run up, even though it pulled back the last few days on the daily chart. Again, it had a big run. It's correcting. Where's my first level? Just go to your former high pivot right up here. Look at this, guys. So basically a Pierce of 200. I might look to day trade this today. Notice this high pivot, and then look at how we consolidated right here before breaking up. That tells me that if we come into this level, we should get some sort of day trading bounceable opportunity. Not a swing trade, mind you guys. I am not going near this market as a swing trade in most cases. That's not true in all cases. I've nibbled on Oracle. I even nibbled on Rigetti yesterday, but very, very small starter positions on some of these. Speaking of Rigetti, look at this, guys. Remember, this was the hottest stock in the market. I mean, amongst Robinhood and Palantir. We'll look at those as well. But look at the fall on Rigetti, folks. 57%. And if you factor in the gap down today, basically 60% since October 15th. What's the date today? The high here was October 15th. It is the 14th of November. In 1 month, a 60% correction. This is what drives me nuts about the hype that people get exposed to in social media, because social media had people running into this stock when it was $45, $50, $55 per share, when in reality, it was so extended and there's so much risk versus the minor reward you can get And here we are 60% lower in the pre-market. Now, investors who are technicians, which is what I want to get each and every one of you to be, that's where we are. We're common sense. I like to refer to us as common sense, logic-based investors. We don't buy up hundreds of percentage points. Maybe we miss 100 percentage point. That's okay. I don't want to take the risk. The risk of a 60% drawdown? Heck no, not for me. I'd rather wait and maybe start nibbling when it's 60% down. Maybe nibble a little bit more when it's 70%. At some point, it will bounce, right? It's still a company. It's still a good company. It's still a hot sector. The buyers will come in. So again, my 2 cents for us that are trying to learn this, because I know, again, not you guys, if you've been following me, if you've been watching me, you're on point with this, but we have new members or new people watching every day. And a lot of these individuals are panicking because they were in Rigetti and they're down 50% on Rigetti already. And you have to learn, listen, I made those same mistakes, so don't feel bad. I want to first and foremost say that is that it's almost like a rite of passage where I literally made every mistake in the book. I bought all-time highs on stocks, on everything, and I panicked and dumped at lows just before a major bounce. So don't feel bad, but you have to learn. Learn that the charts are our only window with all the nonsense of mainstream media, financial media, all this stuff out there, the social media, all of these, they push emotion on us. They push FOMO. People are out there on X pumping left and right because they're trying to talk their own book. My goal is my book is always going to be what the charts are telling me. Just is. And I'll be wrong sometimes. But again, that's key. All right, let's get onto the more charts. So AMAT, we looked at Oracle, guys. I've nibbled on Oracle for a bounce. It is down today again. Look at this, though. It's coming into another major level gap fill right here around 111 to 110. And again, I'll be just nibbling here. I'm only looking for a bounce on this. I'd like a bounce back to like 250, and then I will exit this trade. Could it eventually go down to fill this gap at 176? Absolutely. But again, as shorter-term trading opportunities, there are quite a few out there. All right, the VIX is spiking, by the way. We can talk about the VIX today. The VIX, look at this. So we're starting to get that spike. This was the high a while back in October, about a month ago. This is what we have to see if we can get back to and take it out. I don't think this market bottoms until the VIX gets in the mid-30s. All right. So again, we still got a ways to go. And again, that doesn't mean we're not going to get technical bounces. We will. But I still think the fear has to get palpable enough where the VIX is in the mid-30s before we get a decent, longer, baseline for a bounce, a significant bounce, not just a 1 day, 2 day bounce, like a week, 2 weeks, 3 weeks, 4 weeks type thing. Okay. Robinhood, guys, I've been warning on this one. It's finally broken, right? So again, we have broken. Robinhood's trading at 115. I have a price target here in the near term at $100, basically 101. There's a big gap fill. That would be probably a significant bounce opportunity per swing traders. And then eventually, I think it breaks even lower. I still think Robinhood's going all the way back down to 66 in the next bear market. I think, again, based on the analysis, we've topped in the bull market. Now it's a matter of how long it takes for the selling to really escalate to where we break this level. I think, again, big bounce here, maybe even back to 120, 130, and then you look for that next wave of selling. Palantir, look at this, guys, keeps hammering on this support level left and right. Yesterday closed right there. Today, let's watch and see, does it close below? Next stop, if it does, will be 152.25. Big support there. Just one of the many, basically the trek to the downside, though. Here's your April low. Look at this, guys. You can see right here, this was your breakdown, right? Hammered, almost closed below, never confirmed, went up. Then it broke, retraced. Now it's starting to break down. This is your next target on Palantir, guys. All right. So again, keep an eye on these out there, folks. They are some big players in the space. These are the ones that were the hottest ones. They're the most concentrated amongst retail. So when fear spikes, retail, a certain percentage of retail will run for the exits. There'll be lots of people that just hold on. They'll hodl these things, but there'll also be a percentage that at some point when they see their accounts going down, they will panic and dump, and that will accelerate the downside on a lot of these names, right? So you can go a lot of these. I mean, IREN is collapsing down here, guys. Take a look at this. IREN, which was a big mover. Beautiful M top, by the way. I mean, that is a classic technical analysis top. It's very a la Bitcoin in 2021. Same exact pattern. Here was your correction when Bitcoin corrected to 30,000. Then it went up, made a new high at 69. Remember, this was 65 on Bitcoin, came down to 30, went to 69, and then we all know what happened here. That would project out IREN probably down to $25 per share or so to complete that kind of a la pattern setup of Bitcoin. Now, do I actually think that this could be due for a bounce today? Yeah, it's down at 45. There's a lot of technical support. So in the near term, I actually am looking to day trade this long today, but longer term, after a bounce, I think it's going much, much lower. And I think a lot of these are, frankly. All right. Speaking of Bitcoin, look at this, guys. What did I tell you guys? All right. I have been dead on Bitcoin, whether it was calling the top here, saying again that once we broke key support, okay, get a bounce. It never confirmed above that line we discussed. I said it would go down to 94 to 95. The low today, 94,455 on Coinbase. And look at that. Did I pick up a little with smart money crypto members today? I sure did. I did nibble on a long on Bitcoin today when it pierced 95,000. And that's the beauty of it, folks. I'm neither bull nor bear in terms of perma. It's all about just tell me what the chart tell me, not me telling the chart tell me what I should be doing here based on probabilities. I will react. I want to be a robot in that way. I want to be pure, simple robot. The chart tells me based on probabilities, I execute the trade. Don't care if I'm going long or short, frankly. I'm just going in the direction that's the most likely outcome. And now, as I was bearish all the way up to here, now I'm flipping bullish. Granted, it's in the very short term, but I talked about this level. This is going to be the big level on Bitcoin that is literally going to determine its next big move. All of these lows, right? Look at these lows, and what did we hit right here? Now, if this at some point breaks, that's really bad. At that point, if we confirm below this level at some point in the future, I don't know if we will, but if we do, the chart then tells me, that would tell me based on the chart, that we likely are headed down into this 73 to 75,000 zone. Okay, now maybe it never will. Maybe we'll go back to all-time highs on Bitcoin. For all we know, it goes like this. I don't think it'll go straight up, but you never know. But the point being is that right now, support, I buy. And if it goes up to resistance, I'll short. And if it goes below, I can stop myself out. And if it goes way up here and breaks through, I can stop out on the short, right? It's simple trading in that way. The hardest obstacle for us all, including myself, is controlling our emotion and being disciplined. That is always the hardest thing to do. Use the charts to tell us if the charts don't hit my level, it is what it is. I missed the trade. I've missed so many trades in my life. It's honestly not you just get used to it at a certain point. It's not about the ones you miss. It's about the ones you take. And if your win rate is high and you're making money consistently, then financial independence takes care of itself. Again, it's what I teach in the Winning Trader series, right? So in any case. All right, so let's go on here, guys. By the way, ETH has not hit my target price just yet. Target price on ETH is down here. I'll be looking to nibble on ETH around basically anything between below 29 to 2750, 2900 to 2750. Major support, downsloping parallel right here, converging in that vicinity. All right, gold. Look at gold, guys. Yesterday, we talked about how this was the next battleground for gold, and it was the determining factor if we would see the all-time high again in the near term. What happened? We closed lower, and look at the selling. And not only that, but this area was support, and we've now gone below that. Now, listen, it's still early in the day, so let's see where we are. But that's a big sell-off from this high at 42.50 yesterday. We're now at 40.50. So that's a $200 drop in gold. And again, folks, as much as we talked about yesterday, the pattern not being as good, until we take out our all-time high and confirm, the chart is still telling me something like this. Okay? So again, watch the charts. Let the charts tell us. If we break above here, all right, game on to 5,000. That is what it is. By the way, silver. Holy cow. This was great call yesterday in this very My Trading game plan. We talked about double top and how it was even bigger than just double top because we had this bigger weekly parallel that we were into. What does silver do? It dumps out. And by the way, I'm a huge long-term bull on silver and on gold. Huge. I have it's one of my biggest long-term investments is in gold and silver. But it doesn't mean I'm just going to be like, oh, let me ignore it when it hits resistance because I don't want to believe it could ever pull back. What sense does that make? Why don't I hedge myself by shorting it there and then I make more money? At least that's what I do. And the only reason I do that is because I have the charts. If I was just guessing, I would suck, right? I mean, it wouldn't make sense at all. But that's what I do. All right. Oil. Oil, we were talking about the cup and handle technically being in position. I didn't really love this big wide range red candle, but let's be fair. Oil is bouncing today. We'll see where it goes, but oil is catching a bid. If it breaks this trend line, that's where it's in play, and it could go up very, very nicely. All right, we could be looking at $65 to $66 a barrel. Again, I'm still not in love with the pattern after that wide range nasty red candle, but it still technically is loosely a bullish pattern on oil. And then lastly, guys, natural gas pulling back today. So close to my shortable target zone right in here. It hasn't got there yet. That's okay. If it doesn't get there and it pulls back, I cancel out my short position that I was going to take there. And if it does turn around in the next week and it goes there, I'll take it still. I'm very much okay with missing trades. By the way, it's one of the great reasons of why it's so great to trade. I trade crypto, I trade stocks, I trade commodities. Because it just there's so many opportunities that you can afford to be ridiculously disciplined, and then you're good to go. Because even if, let's say there's 10 trades and I only get filled on 2 of them, but if there's 10 trades every day, that's 2 trades every day. When I'm looking at this much stuff, there's going to be opportunities. Anyways, guys, I always try to bring my A game because I appreciate the time you spend with me today. Don't forget, share with friends and family if you liked it today. If you hated it, don't share it. Don't worry. It's okay. I only want people really that are into the logic and the discipline of technical trading. That's what this is all about. But I do want to say this, guys. I am here for you. The markets can get scary. I will always do my best. I won't always be right, but I will do my best to guide you in any market condition, bull or bear. I will do my best to alert you to what the probabilities are in the charts. Thank you guys so much for tuning in. I'll talk to you soon. Take care.